My name is Michelle Scarborough. I'm the managing partner of the Thrive Venture Fund and the Women in Technology Venture Fund at BDC Capital, which is the investment arm of BDC. The work that we do with entrepreneurs is to support women entrepreneurs specifically along their journey. So we invest in women-led technology companies from seed to scale across all sectors of the technology marketplace in Canada only, and we look to help them grow globally. So I'll tell you about a woman by the name of Catherine Dahl. Catherine Dahl is an entrepreneur based in Vancouver. She started a company called Beanworks. And Beanworks was an AP automation technology company that Catherine started because as a CA herself, as an accountant herself, working in small business, she couldn't get the tools that she needed to be successful at accounts payable. And so she started this company, she built it to a certain stage of development, and then she hit a kind of a wall, for lack of a better word. She wasn't able to raise additional capital. She didn't quite know where to go. And at that time, BDC Capital was a very early stage investor in her company. And she needed a bridge round to get her to that sort of next inflection point of revenue growth and to really show that she had product market fit. So we stepped in and put money into her business on a convertible note basis, which if you think about bridge rounds that are happening today, convertible note is a typical instrument that it's used. We did that. We were able to rally a number of investors to the table with her. We set up a new board of directors to support her on the growth of the company. That capital allowed her to bring around her the people that she needed inside the business to scale. She was able to subsequently raise additional rounds of financing, scale the company, and ultimately successfully exit that business to Quadient SA in 2000 and I think it was March, just before COVID, in 2019, or 2020 rather. And Catherine today still is involved in supporting the ecosystem. So the success for us really was to be able to help her grow her business, provide her with the expertise that we have as business, entrepreneurs ourselves, help her bring the right capital to the table, and ultimately then help her identify the best exit opportunity for her. So what she's now doing is she's investing in other women, and they're supporting the growth of their companies. She's coaching women entrepreneurs and other entrepreneurs on what worked really, really well for her. And she's investing alongside others in funds that are women-led GPs in order for them to also grow. So really has taken the impact of what she's been able to achieve, the capital that she's been able to amass, and the wealth that she's been able to amass as a result of that exit, and then pay that back into the community that she lives in, and support more women as they grow. So I see that as a huge success story, because we were able to help her, and now she's been able to pay it back. It's really the flywheel effect, if you think about it, or the network effect, if you want, right? So being able to pay it forward, being able to take those lessons and really translate them. We never had role models up until a few years ago. There were few and far between women in the tech space and women that had been successful at being able to raise significant amounts of capital, deploy that capital, and generate the revenues that would make them, large revenue generating companies, greater than $20, $50 million in revenues, and then be able to successfully exit those and be able to understand what that path looks like. So just even having that skill set now allows her and others that are like her to be, very, very, I call them exceptional, because they're able to take that learning, translate that into, language that others will understand, particularly when you're first starting out in a company and, maybe you're a first-time founder and you have no idea. These women can be role models for those, up-and-coming entrepreneurs as well, which is, again, another effect we don't really think about, but is as important as their ability to scale those companies and ultimately exit them, if that's what they choose. Well, it's a really hard market. And I think founders that are trying to raise money right now, particularly if they're at the seed stage, the very early stage, are having trouble. And there are a number of funds in the market, and ours is one of them, but there are many funds in the market right now. But I think when you're looking for capital and you're trying to raise that money, you need to be looking for fit. And you need to be looking for investors that can bring you not just the money, but the added support, the networks, the influence with the customer base that you're going to need. And frankly, in a lot of cases where we see entrepreneurs getting stuck is when they're so focused on raising the money that they forget about the fact that they can actually generate revenues. And revenues are the key. If you can generate revenues and you can focus on the customer and get that customer product market fit right, or even half right, the capital will be there. The capital will come. But if you can't and you're still struggling with that, then you need to be asking some fundamental questions around why. Is it that the customer doesn't want to buy? Is it that you're maybe too early in the cycle? Do you have too much competition? Be thinking about those things, because that will help you identify and understand where you might not be necessarily seeing things, and how you can then turn the tables and start to, get those product market fit questions answered and set yourself up for success so that you have optionality. You have optionality on whether you want to raise capital or not raise capital, and wait for a little while until the market is in a little bit of a better position. Well, I think the next 6 to 12 months aren't going to be great, to be honest. So I think that entrepreneurs, again, that are raising money, entrepreneurs that are looking to build their companies, need to focus on their fundamentals. And to your earlier point, if they focus on those fundamentals today, they'll be in a great position in 12 months to raise the capital that they need, or have the optionality to either continue to grow organically or raise at a valuation that's going to be more commensurate with what they're showing in terms of traction. What I'm most optimistic about, frankly, is coming out of this cycle with entrepreneurs that really understand what it's going to take to build a company and what the fundamentals of company building are actually all about. So they're going to be better positioned for success than maybe, in a frothy market when, we saw huge valuations for an idea on a napkin. I think those days are behind us, and what's in front of us are more fundamentals. And I think the other thing that makes me optimistic is that what we're seeing are companies being built by amazing entrepreneurs that are looking at how they knit not just product market fit together, they're solving a big product problem in the market, but with how they can do good at the same time. So there's more of that coming into play now, which I frankly really love to see, and I think we're going to see more of that. What is the problem that we're trying to solve, as well as what impact are we having in the marketplace broadly? And then how do we bring those two things together so that we can, do better for people, the planet, and profit? Sustainability in a lasting company that lives on will be key. And, think about all of the people you impact when you do that, right? The people that you employ, the customer base, the people in your community, because you can do things for them and with them to help kind of grow the ecosystem as a whole. I think that's ultimately where we're going, and that's what I'm most optimistic about. The Thrive platform, when we put it into the market last year, was a very big initiative. And it's one of a kind, right? We've tried something a little bit different, taking advantage of the opportunity that we had learned, all the things that we had learned from the Women in Tech Venture Fund. So the platform has 3 legs to the stool. It has a fund of funds component that invests in women-led GPs, a venture fund component, which is the Thrive Venture Fund, and then the newly launched Thrive Lab, which we had announced last year as the third pillar, which is focused on partnering with ecosystem partners to support women at the earliest stages of their development.